Welcome to TradeTheMBI.com. This channel's report is for the 12th. A special day always for me. Was Amy's birthday on this day. But Monday didn't produce a whole lot of action. We had a modest increase. It was enough to keep everything pretty much in line. It really didn't change any of the aspects. We're still following that ABM going. In fact, the key levels are still the same. Well, actually, no, we've had an increase in the yellow slightly. We went from 55 to 60 on the daily, so that's fairly decent. But I meant from the DOC standpoint, we're still getting that same ebb of increase in shorts, softening of the bull side of it. We did still have steel now, at least moving back above zero here to start the pre-market. That would be enough to bolster price a bit. NASDAQ, you can see just a little bit less than the S&P, which is important because the S&P has to catch up to the extension that the NASDAQ has made. So a kind of mean reversion. Here we see the euro spiking up, but still caught between this 23% range. This is on the recovery of, political recovery at least, of the five-star backing the euro, so potentially saying, hey, it's not going to go anywhere, but doesn't mean it still isn't outside its range here, as well as have much greater systemic risk, particularly as it relates to economic growth and its comparison to the US dollar. So that's always a question when we look at treasuries. Pretty much holding up quite well, given the fact that we really should start to see a significant increase in yields. Really going to depend on the Fed here if they increase again or if they hold off. If they hold off, I think that that would certainly be a boon to growth in the economy. So keep an eye on that one. But it doesn't seem like it. It seems like they want to normalize and reduce their balance sheet, which is causing ripples across the world. As I was mentioning before, this drain of liquidity of US dollars certainly is going to add strength to the dollar, but it also makes it a problem from a commerce standpoint. USO, again, oil holding up. Not at its peak, but certainly in an elevated area from if we shrink our chart back. You can see how this climb has taken place. Since, it was just right at the beginning of the year. Came back a little bit, but then it started that in February, and once it based up in February there, it's just been a slow rise ever since. And that has built-in pressures into it, but it also has a supporting aspect. As long as it doesn't get out of control, it can help fuel things, because you're increasing the amount of people who are in the drilling business, and that particularly in the U.S. These days with the opening of the shale, and that definitely bolsters the Midwest economy, and that spreads out in ripples through a lot of different industries, from housing on down. And gold, which is basing at this particular point, we've got an improved shakeout, so there's been some accumulation taking place throughout this. Now it's just a question of the catalyst for a breakout, and typically we would need to see that steel having dipped down, and that would be at least a trigger point to suggest that short-term buyers have reset. So we look at the 5K. There really wasn't anything to talk about. We saw the pre-market had dipped up, was moving back towards the highs, and we never really deviated from there. We ended up with some gold candles a couple of times, and we had the Azure develop, and then it did it again right there, and this one was a little bit weaker, even though it was up towards the highs. Didn't quite make a new high or reach that one. Then we ended up with a 50% retrace that led to a move back to the 0%. But of course, that's all been on a rising Morganacci, and we can see the squeezing again. So we had the expansion, got up to 20 from a spread standpoint, and then back down to the 11 where we're at right now in a DOC spread. So this is clean weakness from that standpoint. So likelihood is we may revisit the lows there, given that opening and spread right there at this particular point. So all in all, everything coming out of Singapore and that was okay. I don't think there was anything earth-shattering other than there's communication and the world isn't going to blow up, which from that standpoint is always a better thing than the other. So that's enough to keep, I think, the stability of the markets and nothing crazy happening. So then they can get into the machinations back home with budget and stuff like that and what's going to happen there. So that's the long and the short of it for now. As always, though, trade well. We'll talk to you later.